Good afternoon. This is Ken Long from Tortoise Capital with a review of the daily trading plan for March 19th, 2011. We have a market that is in bullish, volatile conditions. On an annual basis, it's at 58 out of 100, high end of normal on weekly RSI. At 39 out of 100 on the 10-day index, so we're just slightly below average. The slope of the 200-day moving average, the stretch percentage of the price compared to the 200-day moving average is at 8.68. This is still bullish, but it's come down from the yellow zone into white, so it's considerably weakened since the swing high. The slope of the 50-day moving average is still slightly positive at 0.07, but since this is one of the weakest readings of the last 180 days, it gets a condition code of red. The ADX at 25.7 is strong. The bad news is that's coming from bearish price action. ATR percentage at 1.73 is at the high end of volatile, as we can see down here on the volatility chart. Just how much volatility has increased, over 4 times. Almost 4 times as volatile as it was even 60 days ago. Taking a look at the gap stat, in the last 30 days, the market has gapped down 17 times. 11 of those 17 times, or 2 out of 3 times, it has reversed to close higher. 6 times it's continued to drop the remainder of the day. 13 times in the last 30 days, the market has gapped up. 8 of those 13 times, it has continued to go higher. 5 out of those 13, it has reversed and closed lower. And so the pattern is definitely in favor of market going up on an intraday basis. The 10-day index time series, you can see the market still is at the lower end of neutral with a score of 39. The overreaction system and the channeling system both fire long for the symbol QQQQ, and you can see the pivot points. You can see how ADX came down and almost touched 15 and is now going higher, but now on the weakness in price action with the minus DI above the plus DI. We have a couple 551W patterns in silver and craft, channeling signals in the Qs and then XLY. Friday's price action was measurably stronger in the diamonds, Asia less Japan, agricultural commodities, and blended commodities. I'm liking McDonald's right now. It's a 3-day max pain and was a 1-day washout on Friday, so that could be an overreaction. I like that Intel and Cisco both are oversold on a 10-day and a 3-day, but we're not percent losers on Friday, so they may have bottomed already. ExxonMobil is a candidate as a 10-day max pain and a 1-day max pain. You can see the strength from Friday. We're in American Express, JP Morgan, Pfizer, Caterpillar, and Merck. Inside the ETFs, strength was in Japan, Asia less Japan, and silver, suffering in coal, energy, and the NASDAQ 100. Very few patterns among the Dow candidates, although there are quite a few dojis based on Friday's price action. That has more to do with the intraday volatility on Wednesday and Thursday than necessarily anything that happened on Friday. You can see Kraft is a 551W here. Intel, Disney, General Electric, McDonald's, and ExxonMobil form our 5 max pain range compressions. You have to like Caterpillar if you are looking for strength candidates. It's been in the green across all measured time periods. Chevron not far behind, and American Express and Merck both looking pretty good. Very few patterns also in the ETFs, channeling in the Qs and XLY, consumer discretionary, a handful of dojis, a 551 candidate in silver, and max pain range compression, Asia less Japan, the Euro-Asia blend, Latin America, Japan itself, and agricultural commodity DBA. I like DBA here. It's been a 5-day down candidate for a while. It's a strength leader on a 3-month and 3-day, and was favorable on Friday. So there's possibility for more momentum on DBA. On the 30-day regression line, you can see the slope has gone negative, and the R squared has strengthened to 0.42 as we have the market starting to exert itself to the downside. That's actually making the R squared statistic get stronger. You can see on a time series just how far the slope has degraded. 3 standard deviations worth of degraded in the last 45 days. The percent stretch has come from just under 2 standard deviations. It's moved a full standard deviation down to being just slightly above average for the last 180 days. And you can see the price action that goes along with that. The intraday range stat reference sheet, I'll leave that for you. Safe zone channel and the gap statistics. Again, you can see the degrading of the signal strength in SPY. The last 2 times it's violated the channel, it's been to the downside. In the 30-60 quality, I'm looking at Merck, Johnson & Johnson, and Procter & Gamble, since they were horrible on 2 months ago and getting slightly better 1 month ago. For that same reason, I would like AT&T, McDonald's, Kraft, and Coke, because the improvement is measurable. Only Chevron has really maintained its overstrength from 2 months ago, with greens almost all the way across the board. Among the ETF 30, this leads the same 30-60 stealth leads us towards China and Latin America, and you can see how gold and treasuries have really already been exerting themselves in this area. Looking at relative strength among the indexes after we've subtracted out SPY, you can see just how badly the techs have been doing compared to the rest of the U.S. indexes. The techs have made a 2 standard deviation move away from the market, whereas perhaps flight to quality, the Dow and the mid caps are leading the way. Among the commodities, you can see they are still better than SPY, although they started rolling over a little bit on Friday. And among the internationals, emerging markets have been better, and you can see, and so is Latin America. I'll leave Elder's Safe Zone channel for you to refer to, and the top 15 winners and losers. Daily pivot points for your reference. The holding X number of days statistics right now, you can see that among the U.S. indexes, the mid caps have the relative strength. Everything else is suffering. See how bad this the moves in Japan have been. Here's over the last 10 days. That's a 2 sigma negative return for Japan. And those are all the highlights from the daily report.